Good morning on the first day of November. We're here live from Investors Business Daily in Los Angeles. I'm Elaine Lowe here with Ken Shreve. Today we're going to be taking a look at health insurer Cigna, medical device maker Abiomed, and animal healthcare company Zoetis, as well as a preview of Apple earnings today. But first, let's take a look at those indexes. We have the Dow up about 0.6%, and the S&P 500 and NASDAQ both up about 0.4%. So what's going on this first day of November?
Well, really strong gains for the market Tuesday and Wednesday, and we're extending gains today. So index is looking to make it 3 in a row. So we've got modest gains in the early going. We've got a big jobs report Friday. We've got Apple earnings after the close. So some people thinking we may be in position for a little tradable rally into the end of the year. We'll see, but we're still waiting for that sign of strength from the major stock indexes to confirm a new uptrend. That would be in the form of a big percentage gain and higher volume. Haven't seen that yet, so we're still in a correction.
And we have that NASDAQ still climbing back toward that 200-day line. All right, so taking a look at a few companies jumping on earnings today, we have Cigna, which recorded a beat and raise quarter with earnings of 36% to $3.84 on 9% revenue growth to $11.46 billion. That's better than views for $3.44 a share and $11.17 billion.
Yeah, this is a health insurer in the process of acquiring pharmacy benefits manager Express Scripts. Right. I think that deal is supposed to close before the end of the year. But this is a nice breakout for Cigna today, over a 216.10 buy point. Sometimes charts, it's a little difficult to see a buy point, but a pretty clear entry here with Cigna. 216.10 is the entry. I think the stock has given back a lot of its gains, so despite a gap up, it's still up nicely on the session, but it is near its session low after an early pop. But a really nice quarter from Cigna.
And investors not too happy with the initial Express Scripts acquisition announcement, but seeming to be pleased with results today. All right, moving on, Abiomed, the medical device maker, also beat with EPS up 84% to 81 cents a share on revenue growth of 37% to $181.8 million. That's better than views for 73 cents and $175 million.
Yeah, this is a company that makes devices that basically assist or even replace the pumping function of the heart, and it had been a long-time member of the IBD 50, but one of many growth stocks in recent weeks that has really been taken apart by selling. So it was acting pretty weak headed into earnings, and frankly pretty disappointing price action today. The stock was up 9% intraday on a pretty good earnings report, but it has given back a lot of those gains. You can see it's just above its 200-day moving average, still below the 50-day moving average after a sharp pullback. So it really remains to be seen if this stock is going to be able to resume its leadership role. It had made a big move in recent years, so still struggling from a technical perspective.
Got it. All right, so that's one to keep an eye on. Moving on to Zoetis, that's the animal healthcare company, also beating views with EPS up 28% to 83 cents a share and revenues up 10% to $1.48 billion.
Yeah, this is a real steady Eddie. They don't really suffer from that much uneven demand for the company's products and services. They sell to livestock people as well as veterinarians. So pretty consistent earnings and sales growth in recent quarters. Not a real massive price performer, but just steady Eddie, slow, steady wins the race, but really good breakout here. This is a stock that initially tried to break out over a 93.77 entry. It stumbled. It is gapping up to a new high today. We looked at two previous stocks, Cigna and Abiomed, that were giving back gains after an early pop. You can see this one's up near its session high, holding above the 95 level. So great numbers from Zoetis, and bullish move for the stock today.
And steady Eddie is a phrase that could be applied to a lot of these other animal health care companies, animal device makers. There seems to just be very consistent demand.
Yeah, it's not, you know, some businesses are very cyclical where demand is strong and weak, but pretty steady demand for Zoetis' products and services.
All right, and all eyes will be on Apple earnings after the close, where EPS is expected to rise 35% to $2.79. And revenue is seen growing 17% to $61.49 billion. Now, we'll only have a little more than a week's worth of data on how those new iPhone sales are doing, but we'll be looking for Apple services, Apple Music, how some of those other segments are performing.
Yeah, and also looking to see what Apple has to say about guidance for the holiday quarter, which will be 3 months from now. But they're typically pretty conservative with their guidance. But I think guidance this time around, for the holiday quarter is going to be very important for Apple. It's interesting, the weakness for the stock market in October and FANG stocks was very well documented. Names like Amazon and Netflix down 19-20% for the month.
And not hitting Apple as hard.
Yeah, no, I mean, not even close. I mean, Apple was only down about 3% for the month of October. So I think there are some people thinking that we could see a good earnings report from Apple, and whether or not it will be enough to help the stock remains to be seen, but it's actually held up the best out of all the FANG stocks at this point.
Although it is hitting some resistance there at that 50-day moving average, but given the other hits that other FANG stocks have taken, is that not as big of a concern right now?
Not as big of a concern. I mean, when a stock breaks below the 50-day moving average, the 50-day line can often be a resistance level, but you can see Apple really has not fallen that far from its highs. And again, when you're looking at 19-20% declines for Amazon and Netflix for the month of October, Apple's not looking too bad here.
All right. Okay, thanks so much for watching, everyone. Make sure you're catching us across all of our social platforms. That's Facebook, Twitter, YouTube, and Instagram. And plenty of our videos, both our news updates and our evergreen educational videos, can be caught on YouTube as well. So make sure you're checking in there. Thanks so much for watching, everyone. We'll catch you tomorrow.